This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and make profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And you're listening to episode 202. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rkraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the MicroCap message. Today's episode is sponsored by Quarter, whose mission is to change the way people look at investor relations and create a completely new bridge between companies and stakeholders. Visit your app store of choice to try it out, and that's Quarter, Quartr. We're pretty much at the tail end here of earnings season, so go check it out, download the app, and take a listen to a few calls. We are now 2 weeks away from the SNN Network Canada virtual event happening December 7th through 9th, 2021. Please go to canada.snn.network to see the list of issuers that will be joining us. Paul Andriella, on behalf of Small Cap Discoveries, and myself from SNN Network, are teaming up to highlight our neighbors to the north, Canada. Paul and his team have been finding value accretive opportunities across the TSX, TSX Ventures, CSE, and now the NEO for a long time. And we wanted to host an event that encapsulates all of those opportunities. So you can expect 3 days of keynotes, educational panels, company presentations, and one-on-one meetings. To register, please go to canada.snn.network and click the register button. I look forward to seeing you all there. For episode 202 of the Planet MicroCap podcast, I spoke with Robert Mulcahy, better known as @TinyStockNinja on Twitter. I've been following Robert for a while now, and he's a fellow microcapper in the trenches. While he is well on his way to becoming a full-time private investor, Robert has a number of investing stories under his belt already. Companies can screen well all the livelong day, but all too often, especially with microcap stocks, it comes down to qualitative due diligence. And we chat about a few of those qualitative tales from the crypt. So thank you again for tuning into episode 202 of the Planet MicroCap podcast. And please enjoy my conversation with Robert Mulcahy. Everybody to the Planet MicroCap podcast. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And joining me today from his tech support hub, not actually sure where, but this is somebody who I've been following for a long time now, a fellow microcapper in the trenches. This is a classic, getting into it, hearing his strategy, looking at microcaps. And he's got one of the best Twitter names in that regard. So joining me right now is Robert Mulcahy. He goes by the pseudonym, I guess the account name, @TinyStockNinja on Twitter. Robert, thanks for joining me today. How you doing, man?
Thanks, Bobby. I'm happy to be here. And I'm in Ann Arbor, Michigan, by the way.
Ah, okay. Is it started like the crazy snow yet? That's what happens there, right? I'm in LA. I don't know these things.
It snowed on Sunday, but it's all gone now. Oh, it'll be coming for sure.
But it comes back, right? It's like
until April.
April. How'd you land in Ann Arbor? Is that where you're from originally?
No, I'm from Austin actually originally.
Okay.
And my wife is doing her PhD here, so she dragged me up here.
Nice. What's she getting her PhD
in? Molecular and biochemical nutrition.
Can you call her?
Right. Well, no. So here's
way more interesting. No offense. I'm just saying.
No, Bobby. This is the thing: is when we started dating, she was this cute blonde girl studying nutrition, right? Going over macro and micronutrients with tests, and then she went to her master's, and it turned into epigenetics, and I could kind of follow. And now I just have absolutely no idea what's going on anymore.
Oh, that's so awesome. Well, I wish you the best of luck because that just sounds so difficult. I was joking with my wife the other day. I was like, when it came to science, like AP Bio or Chem, like that was a total other language to me. Math I could get, but that
Right.
no, I just couldn't do it. But very cool. Well, look again. Thanks for joining on. You've listened to the pod a number of times. This is actually our first time meeting together. So I'd love to learn a little bit more about where your passion for investing began. So take us on the tiny stock ninja journey.
Yeah, absolutely. So I have a pretty non-traditional background. I went to a local college in Texas and I studied history and political science. And while in undergrad, I had two accidental encounters with business. So the first one was my father was a private practice pediatrician, and there were just a ton of really bad headwinds going on there. I mean, the market was super oversaturated, reimbursement rates were really bad. So I spent a few years with him, every single month just figuring out how to keep his business running for another month. And that was, a head first education into business. And then also at the same time, I have always been really into fitness. And while I was in undergrad studying history, I got certified as a personal trainer, and I worked at a place on campus training faculty and staff. And one day I went and asked for a raise, like any good businessman would, and I was denied. So I told all my clients about it, and a lot of them said, "Hey, we're a lot more loyal to you than to this business. We'd rather be with you." So next thing I knew, I was filing a DBA, getting a sole proprietorship, which is a terrible idea in fitness. Don't do that, by the way. Not advice. Hire an attorney. And then I was negotiating a partnership with the local community fitness center, and I had started my own business. So here I am in undergrad studying history, and then I'm also helping my dad run his business, and I'm running my own fitness business. And my real edge with that was education, because I had no idea what I was doing with anything at all. So I was constantly just soaking up everything I could from podcasts and books with business. And I was one of those people, and I'm sure a lot of people can kind of relate to this, especially if they're listening. When I discovered the concept of compound interest, my brain just like clicked immediately. There was just, I mean, why would you spend your time doing anything else? If you can turn 50 cents into $1 and you just repeat, it made so much sense. So after I left undergrad, I went to graduate school for government, and I kind of went there knowing that person in me was long gone. I had no interest in it, but it was really great because it was 2 years for me to just spend in the library, just soaking up more business. And as I kept doing that, I'm sure a lot of people can relate. I found myself gradually sliding down the market cap scale into microcaps as I was running screens and stuff and finding companies trading at, a PE of 5 or something. And you look at it and you kind of figure out, well, what's really wrong with this? And you kind of learn it's nothing. And then, of course, in hindsight, you learn it's, a $20 million market cap company, right? So that's kind of how I found my way into it accidentally.
Very cool. What a great. I love the non-traditional route to getting to microcaps. It's just the best. I mean, wait. So take me to when you're in those 2 years in the library.
Mm-hmm.
Firstly, what were grad school for government? What, are you trying to be a politician, or what was the end game?
Well, so that's the thing is I had already applied while I was in undergrad and running these businesses, and I was given free grad school. And at the time of graduation, and I went to Ohio State actually, which is funny because I live in Ann Arbor, but that's a whole other conversation we can have on Twitter. But at that time, I was going to go there for government, and I kind of went in realizing I had no real interest in it, but I had 2 years of deferred time to work with. So I mean, I did go to class, and I graduated and everything, but I spent 2 years, soaking up Barron's and trying to, get my hands on a copy of Margin of Safety, and it was a good time.
Yo, why didn't you try and challenge Jamie Catherwood to having your own, financial history course? I mean, here you go, history undergrad, government, grad school. I mean, come on, man.
I just don't think I'm that interesting.
we need a microcap amnesia. That's what I think we should. That's what we should work on next. But very cool. All right, so you, like everybody, most people who have the non-traditional background, you kind of fall, ass backwards into microcaps because it makes the most sense in many respects. So when you first start in looking at microcaps, you finish grad school, what are you doing? I mean, are you just starting to invest in your own PA? Do you have a full-time job on the side? Like what's going on during that time?
Yeah, so I do have a a PA, of course. Why else would I be here? But I do have a full time day job that I actually kind of view it, and meeting Maj really helped professionalize this approach of. I listened to something he said where he said he viewed investing as his full time job, and then his day job is just something he does, and that's exactly how I treat it. I view it as having two full time jobs. So I do work in management in local government actually during the day. But I do consider investing my full-time day job. So I wake up at 5 a.m. every morning to spend a couple hours investing and then lunch and, the evenings. So I definitely kind of view it like that.
Very cool. All right. So let's dig into your core microcap philosophy, right? So like I said, fell into this after doing all this research and work. For you at this point in your life, what would you say is your microcap investing philosophy? What do you look for? What's interesting to you? Let's hear it.
I am a very concentrated investor. It probably scares some people off talking about it, but I like to have, three or four core holdings and, 20, maybe 30, sometimes 40% at cost, and I will let them run. And the whole reason behind that is I'm trying to build capital to get to be a full-time investor right now. So I'm looking to be a full-time investor in the next 2 or 3 years. And I want to be really public about that because I think it'll hold me accountable to it. Right. I'm doing that intentionally. And I think Trey Henninger was on the show recently, and he broke this down much better than I can. So listen to that episode. But that part of the reason too is I spend a lot of time getting to know these companies because I want to talk to management. I want to know what drives them. I want to know how dedicated they are. And I really want to know every single thing going on in the company. And right now with a day job, sometimes it's really hard to do. So when I do transition into being a full-time investor with no other full-time job, I'm probably looking to expand into the 8 to 12 range of holdings, which is still, quite concentrated. And then the other thing I do, in addition to my core holdings that I'll let run and run and run, is I do have, and I don't know if this is just for my personality or just because sometimes there's just some interesting opportunities. I do have a little basket of special situations or one-off trades sometimes that I like to enter in and out of, and that can be a lot shorter, 3 to 6 month time frame to play out.
I'd like to take a quick second to tell you about this episode's sponsor, Quarter. With Quarter, you get frictionless access to conference calls, investor presentations, transcripts, and earnings reports from markets all around the world, straight from your pocket for no cost. Quarter's mission is to change the way people look at investor relations and create a completely new bridge between companies and stakeholders. The first step on this journey is to let you, the user, interact with the company's content while you're listening. Visit your app store of choice and try it out today by searching for Quarter. And that's Quartr. Now back to the show. Very good. All right. So what types of companies are you looking for? What kind of criteria? What are things that interest you when you're going into the discovery and due diligence process?
Well, I am very interested in, this is going to be, revolutionary stuff here, Bobby. I like profitable companies with a lot of insider ownership. I know,
What?
right? I know. So,
Crazy.
That's the thing is it's a common trope in microcap investing, but you can't avoid a lot of unpleasantries in microcap if you're looking at profitable companies. And the other thing too is I really like looking at high insider ownership companies, and in a lot of cases, insider ownership that is acquired through direct purchases, not through grants, right? So, and in terms of that, I'm also looking in the U.S. only, and that is not a rip on other geographies or anything. It's just if I'm only looking for 3 or 4 core stocks, I don't need to go look in other markets right now. I have plenty of opportunity here with the 10, 12,000 microcaps, right? And I would also kind of piggyback off of that and say, if it's a Canadian company that's doing 80% of its revenue in the US and, they have offices here, I would consider that to be more of a US company than a Canadian company. So it's not strictly, geographical, but I'm definitely interested in just, looking for really, kind of boring, straightforward companies that are maybe illiquid, definitely misunderstood, and have a lot of insider ownership, because I've found that that's usually the best way to have success is when you have people who are motivated by their own incentive.
So what I'm really hearing is that you love story stocks. right? Story stock
Yeah.
sounds
Oh
like
yeah.
your bag for sure.
Oh yeah,
Right?
man.
All day,
So
right?
yeah, love story stocks. No, but so I mean, like for example, a stock that I've talked about ad nauseum, on Twitter, and then a lot of the work I've done with geo investing is Crescendo, which I do own, the ticker CXDO, and that's one that's really interesting. I mean, the CEO has 70 years in telecom. He's actually been operating in telecom for a third of the time that phones have existed. Which when I typed that up and my wife proofread it, she thought it was a typo. But no, so a third of the time phones have existed. And the thing is this is one where I mean the insider ownership is around 60%. They're growing 20-30% a year, and it's the exact same management team from back in the day when they ran a telecom business that they sold successfully, and they're doing the exact same playbook. So I mean that's a classic example. And I mean full transparency, I mean I think the stock's at about 520 right now today. I mean my average cost is at 6, so I still think it's undervalued. I mean it's just sitting there doing nothing, but it is one that's profitable, and there's a lot of really interesting things I like in that. So I mean you have your high insider ownership, it's a profitable company, it's in the US, and then also there's a lot of little things in microcap too that you can pick up on that you just can't get, where management team is, I don't want to say management is less polished, but they're not the Disney, Harvard MBA management team coming in with the canned remarks. I mean, so for example, in Crescendo, sometimes they'll telegraph in their conference calls a lot of really interesting info arb. Where in the Q2 conference call, the CEO said, "Look, we're looking to grow 50% a year, have a non-GAAP profit, and be GAAP break even." And then in Q3, they grew 113%, were GAAP break even, and had a non-GAAP profit. So I mean, there's just this edge in microcaps because no one's paying attention. And it's awesome.
It's the best. That's why. I mean, yeah, that's why we're here. Of course. I mean, Well, okay. So we were talking offline a little bit about some qualitative stories that you've experienced when doing your research on potential investments, or I think they might even be core positions. So, love to hear some of your tales from the qualitative depths, if I may. So,
Yeah,
take it away.
absolutely. So, and these are, I mean, I guess what I want to say is one thing I really try to bring in with my non-traditional background is, of course, I look at the numbers. I mean, I had to learn accounting, I had to learn finance, I had to learn how to, read statements and do, modeling evaluation. But something I'm really interested in is the qualitative aspect, because in a lot of cases with microcaps, the people running these companies make a big difference. I mean, if you have 5 friends who are addicted to Starbucks, they might not make a difference to, Starbucks sales. But if you have 5 friends who are getting hot on a trend with a microcap, that actually can be a predictor of success. So one example is EDUC, Educational Development Corporation. I don't own it anymore. I did. And there was a little bit of several factors coming together. And this was just like a smaller position, kind of like a trade. So around the time of COVID, I had noticed there was some clustered insider buying, and it wasn't just the CEO, it was the CFO, a director, like the chief marketing officer. So there was some clustered insider buying, which is always an interesting thing that, investors should pay attention to. And I was over at my sister-in-law's house, and I had noticed on her bookshelf that she had a bunch of books that were published by them, because this is a book publishing company for kids. And it's also like a Tupperware sales model where they do home parties with consultants, and people will sell to their friends and stuff. And I had noticed that, and I asked my sister-in-law about it, and she's like, "Oh yeah, a bunch of my friends have gotten really into this, and they started selling these books." And it was during the height of the pandemic, where a lot of stay-at-home parents had nothing else to do, so they start hosting all these parties and selling books. At the same time, there's all this clustered insider buying. And at the same, I mean, I want to be totally transparent. The stock was cheap. I mean, it had earnings per share. It actually pays a dividend, which is kind of weird for a microcap. I mean, so the financials looked good, and I had just noticed a lot of little strange qualitative trends where if there's a bunch of, Michigan housewives getting into selling books, that might be a trend that's catching on. And I bought in around $4 or $5, and it sold about 12 in, just a period of a few months. So that was pretty interesting. And that was something that, so, kind of that like soft edge with due diligence, just kind of talking to people more Peter Lynch style.
It almost sounds lucky though, right? And
100%.
like how often does that happen when like you go over to like a random friend's house, you're doing some random, and it's like I find this happening all the time in microcaps where there's a product being used and you're like, oh, I know that one. Like that's microcap. Like what? And then you get into conversations like you had with your sister-in-law. You're like, oh, was that? When did you start using that? It's like, oh, this was that. It's find it kind of interesting. We like this. So I find that happens all the time, and it's
Well,
lucky almost.
I completely agree, Bobby. And that's the thing is investing is already hard enough that every once in a while, when you just get something served up to you on a platter, just take it. Just take it. Don't overthink it. And it was a small position, and I sold it, and it was fine. Now, in terms of more like serious due diligence, more serious qualitative due diligence, I like to do. Muscle Farm MSLP is a company I've sure some people might have seen. I have some kind of negative tweets on. I do not own the stock. So Muscle Farm is a company that is a really well-established brand in the fitness space. They make protein powders and other fitness supplements. I'm sure a lot of people have seen their protein at Costco. And they had a big scandal a long time ago, about 2014, where they were amino spiking their protein, which is when you actually add extra nitrogen into the protein powder, because when you test for protein content, you're looking at how much nitrogen is in it, and you can add nitrogen, which is really cheap. And then the protein, instead of having 25 grams in a shake, has 9. So they had a big scandal, and they just have just tons and tons of litigation. So the old CEO's out. He's actually running a Canadian microcap plant-based protein company now. And there's a new CEO in who's trying to turn the company around, clean up all the litigation, and pivot into energy drinks. So I have some contacts in the fitness industry from my days as a trainer, and I'm still pretty involved in it, actually. And I know two individuals who run supplement retailers. So one is in Australia, and it's a really large retailer, and one's in the US, and it's an online retailer. And I asked both people about the new CEO, Ryan Drexler, and neither of them have ever even heard of this guy or talked to him, which that alone is kind of a pretty big yellow flag, if not a red flag, in the fitness space, because a lot of the companies have really good relationships with their retailers. They'll work on an exclusive product line or an exclusive flavor with this retailer. So they don't know this guy at all. And that's kind of interesting in this space. And that's kind of a red flag. And then my colleague in Australia told me that they completely stopped carrying their products because there's no demand for them. Absolutely none. So this company is trying to launch an energy drink line at the same time that the feedback I'm getting from the fitness community, the people who are actually buying these products and then selling them, is we have absolutely no interest in this. And then I'm also a little skeptical of their plans in terms of how they're kind of marketing their company now. They're building out a gym, and they're starting to sign up athletes and pay them to NIL deals, like college athletes. And first off, that's how Muscle Farm got in trouble in the first place. And then second off, that's about a 7 or 8 year old plan. I mean, fitness has evolved now where there's a lot of influencers doing, targeted stuff with really niche brands and training. And Muscle Farm is kind of running an old playbook. So I'm pretty skeptical about that. And I mean, I think we kind of saw that Muscle Farm has not got it together, because they reported a couple days ago they couldn't file their 10Q on time, and they had a loss of 12 cents a share. So the stock's down from 70 or 80 cents to like 58 cents today.
Well, listen, I mean, that's a great example of you using your experience being I mean, we talked about this on pod that I did with Nerd at the Brill way back when about, being able to use your professional expertise to help you in your qualitative due diligence process. So they're exhibit A right there, right? I mean, have you had any other examples where, you use some of your background while that really helped you when you were doing your qualitative DD? I mean, whether this was a company that you ended up taking a position in or not, like, have you had any other experiences like that?
Yes, I have. So the company I wrote up for MicroCap Club, I was just accepted into MicroCap Club last month, or this month, I guess.
Congrats, dude. That's
thank
huge.
you. Yeah, I'm very happy. And to anyone out there, just keep trying. It took me 3 times, so it's okay. It's okay. You just got to keep trying. So the company I wrote up for MicroCap Club is a company that does document scanning for governments. And that's something I do have experience with for my day job. And it sounds, I mean, just horribly boring. But the thing is, what happens in governments is there's so many records. I mean, like city council minutes or ordinances or zoning laws or deeds that have to be kept forever. And I mean, that's going back maybe a couple hundred years. And the thing is that all just piles up somewhere. So I'm aware of the problem that you have to solve in terms of having documents digitally stored and scanned and able to be retrieved. And the company that I found and wrote up does that. And I was able to talk to the CFO and have a really good conversation about their strategy for how they're, doing a value pitch. Because the thing is, I know this, working in government, the governments are not in a rush. They know it's a problem. It's going to be a problem next year. It's going to be a problem, the year after that. So I talked to this company and they had a really good strategy in terms of, okay, well, let's just try to get into one single department first and then have the word of mouth spread because, well, HR has this and it's working out really great. So then it'll spread throughout the organization. So, and it was great because I was able to talk about it and kind of piggybacking off of that in terms of the qualitative due diligence again. I talked to the CFO of that company instead of, the CEO or any, IR person. And my uncle, he was the CFO of a MicroCap bank, which if that sounds impressive to anyone, just run a screen. There's thousands of them. But he was a good CFO. And I actually asked him, what questions would you want to ask a CFO versus a CEO or a COO? And he told me that any CFO is going to know their numbers. That's just a fact. But a good CFO is going to be able to tell you about the strategy and how the strategy is integrating into the numbers and separate themselves from what is high margin and low margin versus where the company is trying to go. So I was able to take all of that and walk away from it saying, wow, that was a really good CFO I just talked to.
I feel like there should, with that in mind, it's almost like a preference to talk to the CFO versus the CEO. Most of the time, the CEOs usually don't. I mean, the CFOs usually do will talk to investors. I'm not saying they don't, but I mean, that almost puts a premium on talking to a quality CFO versus a quality CEO in that sense.
Well, I would completely agree, especially because a lot of CEOs they're great at sales.
Yeah.
And I mean, that's
no
great,
problem with that. We're not poo-pooing it. That's definitely a quality skill, but what you're talking about is a little different.
100%. So, I mean, that's the thing too. And then sometimes kind of playing off the qualitative lens here. I mean, there's a lot of ways to even just think about how you are approaching companies and stocks. So for the past year, I've only done phone calls and emails with management. And that's not even bad in itself because you can still get a lot of valuable information as an investor from doing that. So in terms of phone calls, I tried to call someone and, I left a voicemail. They call me back 2 days later. I missed it. And they're texting me to try to set something up. I mean, that's someone who wants to talk to an investor. And you're able to ask a lot of good follow-up questions you might not be able to get in otherwise and kind of just piggyback off of that. In terms of emails, I mean, I'll send out, a couple a day and just kind of let them float out there and see what happens. But you can see who's responding and who's not. And then you can see what time they're responding. I mean, I had a company respond to me at 11:59 on a Saturday. I mean, that was great. The CEO is obviously engaged with shareholders. So there's a lot of valuable information you can still get, even if it's not the substance of what they're saying, just how they're acting and how they're running their company.
Robert, come on, man. He was on vacation, all right? And in a place that he was 8 hours ahead of you. So it was 8 o'clock in the morning on a Thursday, all right? So, let's be real about it. But look, we were talking offline. You're a young guy, 29. I mean, you're a few years younger than me. I mean, and you already talking to management teams. And this is something like I've covered on here a little bit, but I love hearing everybody's experience because look, before that first call, it's a little intimidating, right? Where you're like, wow, I'm going to hit up the CEO of they're busy people. They're running these organizations, however big or small. I want to make sure that I'm not wasting their time. What was that first encouragement, I guess I'd say, that got you to be like, all right, I want to do I'm in microcaps. I want to do my follow-up due diligence. I need to talk to management. Okay, here we go. Did conversations with Maj or some other folks in the industry help you get to that point where you're like, all right, I'm going to go do this?
100%. I mean, kind of hanging around Maj has been just very lucky. And it's kind of, I mean, you're like watching, I don't know, you're like watching LeBron or MJ, right? I mean, Maj he's crazy, man. I mean, he works 30 hours a day. He loves investing. and it's like all he thinks about, and he's great at it. And the thing is too, is he's the nicest guy. Like, could not be nicer and more helpful to people. So that's awesome. But the thing is, yeah, it was, I'm trying to, hanging out around people like Maj, I'm trying to up my game. And that's something they do without a second thought. So it's something, it's absolutely a little scary. It's a little intimidating, but you just got to do it. So there's a lot of ways to do it. You can find a lot of really good resources for just general questions to ask management. But what I would recommend is definitely learn about the company, because management is a lot more willing to talk to you if you know the company and you can show that you put in some work. They're 100% going to be a lot more responsive, because at the end of the day, you have to realize these people are just talking about what they do for a living, and everyone loves to talk about what they do for a living, right? So show some interest.
This is true. 100% true. You got any, by the way, great shout outs to Maj. Maj, we love you, man. We want you to do more podcast episodes. This is producer Bobby calling you out. Let's go. We love him. But yeah, no, Maj really gets after it and can totally co-sign that 30 hours a day. Like, there isn't even 30 hours a day. It doesn't matter. Like, he will find time because he loves it. So he's one of the best. But let's get a couple story times. I mean, look, you're a young guy reaching out to these management teams. I mean, you must have some funny stories, and you don't name any of the companies or the names of the CEOs, but I'm sure you have a couple funny stories when they're, like, wait, how old are you? What's going on here?
Oh man. Okay. So yeah, I mean, the company I wrote up for MicroCap Club. So this is actually one that's kind of merging some of the stuff I just talked about. I actually tried calling the CEO directly. I found his number on the internet, right? Just tried calling it. No response. And then I called again, and then he ended up texting me. And he's like, trying to call, but your voicemail's full. And I'm like, oh man, my voicemail's full. It's from all the spam calls that you just block, right? You never even think about it. I'm like, great. Well, that's really helpful. So anyway, I ended up setting out a list of questions, and I finally, I followed the process and emailed, investors@thiscompany.com, right? And, finally got something set up with the CFO. That was really great that I talked to. But I mean, it's just been, the thing is, to be totally transparent, I think I'm the first investor they've ever talked to outside of a company they pay to do IR for them. So they were surprised that someone was even talking to them, and they were thankful. Because I was telling them, like, hey, I'm a contributor at Geo Investing. I'm trying to, help uncover really good stocks that I think are undervalued and have, a lot of tier 1 characteristics that are good. And they just, I guess the thing is, they were surprised that anyone even showed any interest in them. And I mean, so that was great. And I have a good relationship with the CFO. I just emailed him this week when they had their quarterly results. And I mean, he was thankful and grateful. In terms of that, I've also made some big mistakes. So Muscle Farm, I emailed the CEO telling him, how I basically think he should be running his business right now. Full transparency. We're telling him that so one of the big problems with Muscle Farm is there's not a lot of public comps for supplement industry. I mean, there's FitLife brands, but they have a very different range of products and a different value proposition. I'm not a shareholder of FitLife. Thank you. So they have a very different range of products. And I emailed the CEO and it's like, hey, you might need to think about breaking out the different supplements here, like protein versus, branch chain amino acids and pre-workouts and stuff, because they have really different margin profiles. So everyone just sees this and they see, just horrible margins, because whey protein is really expensive. I mean, their gross margins in the past quarter were 0.2%. I mean, they were brutal gross margins. Of course, got nothing back from him, but I also, after that, I was like, maybe I should tell him, like, there's some spelling errors on his website. So I don't think I'm ever going to hear from him. That's fine. So I've definitely taken some lumps, but I've learned genuinely, if you're trying to connect with management, show an interest, know their company, and they're a lot more willing to talk about it.
Right. And I think there's the lesson there too is not just knowing the company, but also show, all right, if I'm going to do an initial reach out, have some come from an approach of questions versus just all right, here's what I would do, because that CEO, however old or young you are as an investor, however much experience, they're gonna be like, yeah, okay, thanks for sure. You're a genius. Bye. Which hey, you might be right. But at the end of the day, you have to think about that human nature side of things where it's like, all right, nobody wants to be told what to do, but if you come at them with some leading questions that kind of go towards your narrative, then you're like, okay, well, maybe I might be able to get somewhere and actually maybe even make an impact. I mean, was that probably the main lesson you learned from that experience?
100%, because yeah, just 100%, because that's the thing is you can't come in guns a-blazing as Mr. Outside Investor guy, with all my opinions. I mean, if you really care that much, buy a bunch and try to get on the board, right? But it's never going to happen with Muscle Farm. So,
fair enough.
Yeah.
I mean, and actually, in fairness, that just more sounded like, you know what, I need to vent. This was a venting email because it's making me upset that I could probably do this better than they can. So, maybe you save yourself some time there, who knows?
Maybe.
For those not watching the video, Robert just did one of those shoulder shrugs. Like, I don't know. Yeah, sure. So, all right, going from there. I mean, once you've done your qualitative due diligence, you have obviously you got there from doing some quantitative metrics. Now you do your qualitative. From there, what are the key things that you're like, all right, I've done my qualitative. I'm going to do a starter position and then kind of build into it. I mean, what do you do from there?
So from there, this is something it's always evolving. Is I'm trying to gauge management's stories on conference calls and transcripts and then the MD&A of their, Q's and K's, and see how it's evolving and if they're keeping track of that story, right? Because that's the real, where you're really going to make your money or lose money. So an example of one that I am not a big fan of, it's a pretty popular stock with a lot of investors, is IntelliCheck, IDN. I am not a shareholder. Got you on that one, Bobby. But it's one that I've been following since around 2019, and they were a company that was, small gap loss, and they slowly, they made their way to, a small, small net income, but they kind of, their EPS was like 1 cent a share, and they were trying to build on that, right? And they wanted to just keep building and building and building and doing more and more implementations. And then somewhere along the line with COVID, they hit a snag. It's a business that does like identity verification, and a lot of times when you're signing up for credit cards. So COVID kind of hit a snag because all this brick and mortar retail just went away. So they start looking at other use cases. But the thing is, what I saw is a business that said they transitioned their commentary from we're looking to grow, GAAP net income, and we're looking to build that into we're looking to grow our EBITDA, which means, okay, where are you going to blow out one of these lines here, turn it into adjusted EBITDA and add in, ridiculous stock-based compensation or whatever, right? So that was one thing I didn't really like, because I like profitable companies, not companies that just kind of, change their metrics to make themselves profitable. And then the other thing too is they weren't fully penetrated into all of these, large banks that they were trying to get penetration into, because those are who are issuing the credit cards. So they're, 30% penetrated into these large banks, and then all they start doing is looking at all these other use cases. And that's all they're talking about, is all these different use cases and all these different verticals and all these different ways to think about the company, and all this, all their solutions can be used for. And so they're just totally, changing how they're judging themselves, and they're changing how they're defining their own value proposition. At the same time, I mean, like their revenue is totally flat over all these quarters, right? It's so that's the thing, is it's kind of like, well, I mean, what's even going on here in terms of your ability to execute a strategy? So that's something I try to follow really closely, versus a company that, actually follows through on what they say and will update their metrics. So that's what I do once I take a position. So I did have a position in IntelliCheck. I do not anymore. And a lot of that was because I felt like the management commentary was just kind of breaking down over time, and they were changing the target to suit whatever was actually fitting the reality.
That's a really interesting key point that I think everybody listening should really jot down if you have a pen handy, is that if you're going to be in the microcap game, it's really important to follow whether or not the CEO is executing on the story that they're telling their shareholders publicly. Right. And there's no right or wrong way to do that as a CEO, right? Like there's some that are very transparent that, will say more than others. But at the end of the day, the ones that tend to be more successful, at least I've seen in the public markets, are the ones that they just put their money where their mouth is, whether it's saying more or less, they just execute. Right. So, just be wary of the ones that, there's always they see another dangle or something, or they see what the market narrative is at this point in time. And they're like, oh yeah, we can get to that too. Whereas they still haven't gotten to the other thing that they were previously talking about. Right. Yeah. So moving forward from there, in terms of other things that you're looking for and following up, I mean, is there anything that we're missing that in terms of your due diligence process, or is it all kind of on a case by case basis?
So I do have, for a core position, a standardized due diligence process that takes, I mean, if I'm going as fast as I possibly can, like a month, where, so first off, always read the K in the most recent Q. And then from there, listen to a couple conference calls, kind of get a sense of what's going on here with management, the value proposition. And then I'll go through and I'll read every single SEC filing the company's ever had, which that's what takes most of the time, is reading every single filing. But then also tracking with that the commentary and who's left and who's joined, right? Because a lot of these microcaps, sometimes they're just random like shell companies that sat around as like a Nevada mining company before, a real business bought it, whatever. And I'll follow through on that. I'll look at all of the financials. I'll read any type of analyst report. Of course, I'll search Twitter, right? See if Geo or Microcap Club has any coverage, or if it's just Twitter and Paul Torres Cohen just tweeting out the ticker, right? I'm sure a couple of you can relate to that. So I mean that's what I'll really do, and then I'll try to talk to management kind of after I've done probably 80 to 90% of the work, because I really want to come in with an informed perspective on the company and what's going on with it. And I mean, the thing is, a lot of the time, businesses just kind of die along that path in terms of seeing it as a quality business to be a core position, because you'll find something that's just so bad, or you'll just see, okay, I mean, this is great, but it's a product, it's not a business. And I'm not really interested in that, especially when I'm so concentrated. I'm looking for businesses.
Have you ever, I mean, going back to the management calls, because that's clearly like once you've done all the other work, that's where it's kind of like you're putting the check mark and like, okay, here we go. I mean, have you ever done a ton of work on a company and you're like, all right, this is looking like this has a lot of potential. I just need to talk to management and answer a few questions for me. Have you ever gotten to that point? You had that call with management and it's like, oh man, they really punted that call, didn't they?
I punted, maybe not, but yes, I think there have been some situations where, and I'm sure a lot of investors can relate to this. You look at a microcap and you just wonder, is there enough meat on the bone here? In terms of, okay, this company, it's a nice company, but it probably should be a private company. It does $1 million in sales a quarter, 2 million in sales a quarter, and they're going to be lucky if they earn 40K this year. And you hope to talk to management and hear this passionate person or this driven person and some future plans that they're like either going to disclose publicly, and the management's always great about that, but you hope to hear something about, yeah, well, hey, I mean, just keep an eye out for something, or yeah, we just hired a new marketing director and they're going to change everything, right? You're hoping to hear that, and then you get off the call and you felt like you just had a conversation with your grandpa or something. So there have been times where you get off the call and you just kind of realize, yeah, there's just not much here. And to be totally frank, I'm still totally learning how to deal with that, where I have like a nice cordial relationship with this person, but absolutely no interest in their business. So if anyone has any tips, you can DM me.
I was going to say, like, there's quite a few investors that I've had on this pod for sure that I think could give you a lot of good guidance on that in terms of like, how do you separate between, becoming friends with some of these, some management teams and being, all right, be objective. Because there a lot of CEOs are very engaging, charming people. I mean, that's probably how they got to where they're at today. Especially if they weren't the founders, they had to get there somehow. So that's probably something that you've already experienced a little bit. Like, oh man, like they're just a cool person. Like I would want to be friends with them or colleagues at the very least. But I have to be able to separate that part out from being objective here.
Yeah, I mean, 100%. And that's something I'm still learning how to deal with. And I mean, I'm sure you probably have a lot of experience. I mean, you've interviewed what, 1,000 people?
Yeah, no, it's I mean, look, I'd say, yeah, it's interesting. It's pretty interesting because most of them, they want good coverage, right? They want good coverage from media. They want to be, but there's definitely times, especially as in media, where like you want to continue to talk to some of these companies because even if it's not the best business on paper, it might be around for a while. I mean, there's some companies that I've talked to that I don't think they've been profitable or maybe even generated revenue for 9-10 years, but they still are public. They still have a story to tell. They're getting after it. And so, you can't just completely poo-poo them, and or say like, hey, we don't want to talk to you, because there might be folks out there that find that story interesting or find some kind of nugget there that, maybe me and you wouldn't look at, but they are like, hey, I actually know this sector. I know this industry really, really intimately, like there's actually some value. There's some value here. Mm-hmm. So, it's one of those things where like, you just be Switzerland.
Yeah. Oh, well, so I mean, you do a better job of it than me. That's why you're hosting and I'm just here once. So.
Well, you'll be back, I'm sure. I've no doubt. Well, at the very least, you're going to be on the round table at some point. But so now I want to get to my favorite question that I ask everybody on here. What would you say was an investing experience that impacted you the most in your career?
Wow. Okay. That's a tough one. So I would say an investing experience that has impacted me the most in my career. It would be, ooh, Bobby, you're killing me here, man. So I'm going to talk about a mistake, which would be the Joint Chiropractic. The ticker is JYNT. I am not a shareholder, which I guess 6 months ago was a bad thing, but now that Edwin Dorsey is kind of attacking it and stuff, might be a good thing. I'm not sure. But that is one that I followed for a long time. I think my average cost in the joint was around $7 a share or something. And I really liked the business. I was a customer of it. They solved a lot of the pain points, pun intended, of chiropractic care, where there were no appointments necessary. You could just walk in. It was kind of like a massage MV model. If you can go anywhere in the country with your membership, whatever. And they had weekend hours and nighttime hours. So you didn't have to have an appointment and there was no insurance. So it was just this whole new business to chiropractic. And that's something I really love about MicroCap, is just the really innovative businesses that, I mean, if they can truly solve those problems they're trying to solve, I mean, they shoot right on up to be, mid caps one day, which is awesome, especially for shareholders. So that's one that I accumulated. My average cost is around 7. And when the pandemic hit, I mean, I know a lot of people had, a lot of choices with their portfolio. And my first thought was, I really don't want a business that is, totally, discretionary here, that you're walking into and you're getting healthcare and you're having people touch on you, right? In terms of performing chiropractic adjustments. So I got out, I don't know, like $14 a share or something. And within less than a year, it's like ripped to 90, or, and I have no idea where it is today. Because I know Edwin Dorsey has, published some short stuff on it. That I think is actually pretty interesting and valid, and were concerns I was aware of, like the payback time for franchises is getting worse with newer cohorts of franchises. But what I learned from that was, sometimes if there's a large macro external threat that's affecting everyone, you might not need to panic with your immediate positions. Because to be totally frank, if I had waited like 2 months and realized, okay, life is generally the same if you have your mask on in terms of, receiving chiropractic care, it would have been fine. And I would have, made a lot more than, 100% return on that.
That's a good one right there. That's a really good learning lesson for everybody. But you said you had do you have a positive experience that changed your career in terms of looking at microcaps?
Yes, I mean, 100%. I mean, so I was a shareholder of XPEL, XPEL, and I did catch some of the tailwinds of that, which was, I mean, every win like this, when you're trying to be a full-time investor, that you have a big 500+% win, that just pulls that, retirement date. Well, not really retirement, because, being a full-time investor is a lot of work, but it pulls that date of leaving the traditional world a lot closer. So that was the story where I really got my first experience in terms of going back a decade plus on the management team and understanding, okay, if they say we're looking at, 3 cents a share in EPS, if management's saying that, they're really meaning 10 cents a share, right? Of kind of the under promise and over deliver, of the network effects expanding. And that was also a business that I think a lot of people might struggle with, because I know so many people have said this, but there's just a lot of cognitive dissonance when you first learn about these businesses. 'Cause you're like, what? It's like paint protection for my car. It's like a car wrap. Like, what is this? How is that a business, right? But what they did is they took a product and they turned it into a business with their network effects, in terms of getting into all of these different areas and then training people, and then their software. So that's a way that you can take a product and turn it into a business. And it's also a way that you can go back 10 years and look at management. And then the other thing too, I want to, really shout out, is it's changed really recently, I think, actually, but for the longest time, their basic and diluted shares never changed. I mean, they never diluted. It was crazy. So that's something too that was really valuable, is learning the value of management that's not going to dilute you, grant themselves stock options. And they had a ton of insider ownership too.
Very good. All right. So before I let you go here to close this out, what advice would you have for folks listening in that maybe are only a couple years into microcaps, and just some good advice for them to stay the course potentially?
Well, I would say the first thing is you're going to make mistakes. Absorb all of the content you possibly can, like, Bobby's podcast and stuff. Listen to everyone else's mistakes so you don't make them. So do that, learn from my mistakes instead of your own. And then I would say it's a lot of work and perseverance, but if you truly can add value to this space, and you have interesting ideas and interesting content, you will be found, and the right people will find you. And it takes a lot of persistence. I mean, like I've said, I'll be totally transparent. I was rejected from MicroCap Club twice. I had to apply, and it was the third time. And I spent years, especially as someone with a non-traditional background, just floating out there. But be persistent, and, seriously, genuinely just believe in yourself, because you will be there if you are good. And if you keep working at it, you will be good. Everyone in the space is super nice. You can always reach out to me or Bobby. I'm going to just plug you, because, you're Mr. MicroCap, hardest working guy in MicroCap. But it's awesome, man. And the thing is everyone's been great. And it's a really tight-knit community, because there's not a lot of people that understand the work and the volatility, especially, and the nuances of it, with these really fascinating businesses that might trade 100 shares a day.
Man, that's a great way to end it. And so with that, Robert, where can everybody go and follow you on social media? And I don't think, do you have a blog? But you contribute to geo investing. So right?
Yes. So I am at Twitter at Tiny Stock Ninja, and then I'm a contributor at Geo Investing and a member of MicroCap Club. So you can probably just DM me on Twitter. So, and also I want to say, while we're on here, happy anniversary to my wife, because I know she's going to listen to this. So today's our 4-year anniversary. So I mean, it's probably not dropping today, but I want to tell her, yeah, happy anniversary.
Well, very good. Well, hey, so we're recording this November 17th. So he got the date right. Okay. Yes. He killed it. And that's a beautiful thing, man. Actually, my birthday was yesterday. November's
happy birthday, Bobby.
Thanks, man. Yeah, look, November's it's a fun time. So listen, Robert, it's been an absolute pleasure, man. I'm so stoked to meet you. Thank you for the shout outs. Thank you for sharing all your insights. And look, I look forward to chatting again soon. All right.
Yeah, absolutely. Thanks, Bobby.
All right. Have a good one. Now go celebrate.
Oh, thank you.
See you, buddy. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.